FSP licensing, a very, very important topic. Now, if you remember from my introduction, I said to you that we've got 3 topics that are non-negotiable that you need to put a lot of effort in. Licensing, representative, code of conduct. And you'll hear me repeat these 3 quite a lot throughout your course and preparation. Licensing, very important. Why is it important for representatives? One, because this is the starting block. This is where you start. If you ever want to start your own FSP, you need to know and understand everything about licensing. And then as a representative, you can be the cause of the FSP losing their license, which we don't want. Okay, so very important to know and understand the licensing topic. We'll start from scratch. I know that you already viewed the video where we discussed the different categories. We're going to recap on it again. Right. Let's get into it. Why is it important to have an FSP license? The Act says, and when I say the Act, obviously FAIS, right? The Act says that no institutional person is allowed to render financial services without an approved FSP license granted to them by the authority. It also says that whatever FSPs had to do to get their license, they have to continuously maintain to keep their license. So it's not like when you went for your driver's license. When you go for your driver's license, you go to the testing center on that one specific day, very nervous, and on that one day, you have to prove to them that you can drive, that you can pull away without stalling the vehicle, that you can pull away on a slope without rolling backwards, that you can parallel park, all of those things. If you do it once, they believe you. Yes, you can drive. There you go, get your license. You never have to prove to them again that you can do it. With an FSP license, it's the exact opposite. Everything that you had to do to get your license, you have to do every single day to keep it. So if I had to parallel park to get my FSP license, I have to parallel park every single day to keep my license. If there's one bad day where I wake up in the morning and I'm just very disoriented and I cannot parallel park today, boom, no more license. Right. So we have to have a license, and it's just not as easy as getting it and then forgetting about the requirements. Everything that we had to have in order to get our license, we have to continuously keep in order to keep our license. So again, different categories. Category 1, 2, 2A, 3, and 4. So our Category 1 license, if you remember correctly, this is our ordinary FSP, also the only one allowed to give advice. How do we know that? Because every other category says intermediary service, intermediary service, intermediary service, administration. So our Category 1 FSP is the FSP where we give advice, where we sell. It says we render ordinary financial services on client instruction. We are not allowed to decide on behalf of the client. We act on client instruction only. We are not allowed to incept a policy, make changes to a policy, cancel a policy without the client's involvement. Then Category 2, our discretionary FSP. Here I am allowed to use my own discretion. I'm allowed to make decisions on behalf of my client. So a Category 2 FSP renders intermediary services of a discretionary nature without implementing bulking. Every client must have their own portfolio. Right. Category 2A is still Category 2, but with additional rules specifically for hedge funds. And a reminder, a hedge fund is not a financial product. It is a financial instrument. It's not one of your products. You won't find it in your book, but it's a financial instrument. So again, Category 2 rules still apply, but we've got additional rules here. They render intermediary services of a discretionary nature, specifically in relation to hedge funds. Category 3, our administrative FSP, they render intermediary services in respect of financial products on the instruction of a client or another FSP, and they are allowed to bulk. Category 4, an assistance business FSP, they perform administration of assistance policies, and an assistance policy is a long-term insurance policy that will never exceed the value of 10,000 Rand. So mostly our funeral policies, not all funeral policies, but mostly our funeral policies, the moment a funeral policy is worth more than 10,000 Rand, it is no longer an assistance policy. Right, so we're going to apply for this license. In an ideal world where our license gets approved, this was the process that we followed. We submitted an application for licensing of a new FSP to the FSCA. The commissioner considered our application. He might have requested additional information. He might have seen something on the application that triggered his interest and he required more information about that. After he is satisfied with all the information, the license will be granted and the conditions and restrictions will be decided on. Every single license comes with conditions and restrictions. We don't have a license where there are no conditions or restrictions. And then after that, the license is issued. In a not so ideal world, where our license got refused, we still submitted our application for licensing of a new FSP to the FSCA. The commissioner considered the application, he might have requested additional information, and then he decided, no, going to refuse this license. If he decides to refuse it, he has to give us reasons for the refusal. The common reasons mostly would be that one of our directors do not comply with honesty and integrity, or our key individual is not compliant in terms of the experience requirements for the specific FSP or the type of products that the FSP will deal with. In that case, we can remove the director, the bad one, or we can get a new key individual and then we can reapply. So if we do that, if we fix whatever the problem was, we have to start the application process from scratch once again. Now, something that the FSP must comply with before getting the license and continuously comply with after getting the license is operational ability. When we get to the representatives part of your course, you will see that the rep also has to apply with operational ability. But our operational ability requirements differ for the FSP, for the rep, and for the key individual. These are the requirements for the FSP specifically. So for the FSP to have operational ability, the FSP must at all times have a fixed physical address. We can't just hang around in thin air. The FSCA must know where to find us. Then the FSP must have adequate access to communication facilities, telephone lines, emails, fax lines, whatever is required. Then the FSP must have adequate storage and filing systems for record keeping purposes. The FSP must have a bank account with a registered bank, and the bank account must be in South Africa with a South African registered bank. And then our FSP must have adequate and appropriate key individuals. You'll see this last rule pop up quite a few times. It's a very important one. If we don't have a key individual, we don't have an FSP license. So you'll see it pop up continuously. Right, operational ability requirements remain there. We need to maintain them. The moment we do not have operational ability, our license will be at risk. So every license comes with conditions and restrictions. We have specific conditions, but here there's nothing to study. Why not? Because it will depend on the FSP. Every FSP will have their own specific conditions. Standard conditions, however, remain consistent throughout the different FSP environments. So it does not matter which type of license, which category, which type of product you'll be offering, all the standard conditions comply to all the FSPs. Now the first one is that the FSP must notify the commissioner of any profile changes within 15 days. 15 normal days, Monday to Sunday, public holidays included. All right? A profile change can be anything like changing the name of the FSP, the address, the contact details, the contact person. Next standard condition, the FSP must have a key individual at all times. This is the one that I said to you, it's going to pop up quite a few times. Must have an approved key individual at all times, never negotiable. Then the FSP must keep a representative register that is up to date and submitted to the FSCA within 15 days after any changes. Changes in the business name will mean that we need to request an amended license, not a new license. A new license means it's a whole new thing, new license number, everything. An amended license means it's the same license, just with an amendment made to it. Right. So if we change our FSP name, we need to request an amended license from the FSCA, not a new license. And then it says the FSP can only deal with products of authorized insurers and FSPs. So if we have a product supplier, our product supplier must be authorized as well. So real products only. Keeping our license, the display rule, if you wrote RE5 before, or if you've written it before and you remember this specific question, for some reason it is not as popular as it used to be. It used to be one of those questions where I would tell you in the workshop, guaranteed you will get this. And then my last, I would say 3 exams, I didn't get this question for the first time in about 10 years. So still make sure that you are familiar with it, but at this moment I would say there's a 50-50 chance, 50-50% chance that you'll get it. So display. How do we display our FSP license? It says here that the FSP must display a certified copy of the license in a prominent and durable manner within every business premises of the FSP. Now, certified copy, why is it certified? And why is it a copy? Why not the original? The FSCA keeps the original. You will never have the original. They keep the original. They issue the certified copies. They print them, copy them, stamp them, do whatever. Right, so we can request as many certified copies from the FSCA as we require. We do pay for them, but we cannot have a certified copy that was certified by the local police station or by an accountant or by a lawyer, because they would not have seen the original. Then in a prominent and durable manner, prominent means it has to be visible, it has to be in your face, you need to clearly see it. Durable, it must be safe from destruction. That's why we normally see FSP licenses being framed up against the wall. If I can just rip it off, tear it to pieces, it's not durable. And then within every business premises of the FSP, not just the regional office and the head office, every business premises. Right, we need to make reference to the fact that we have a license in all business documentation, advertisements, and other promotional material. That means anything that the general public will see, we need to make reference to our license. On our policy document, on our letterheads, our email signatures, any promotional items, things that we hand out with the intention to promote, those all have to make reference to the license. They can either contain the license number or just a statement saying that ABC is an authorized financial service provider. Both would be accepted. Then produce, it says that ensure that the license is always immediately or within a reasonable time frame available for production, which means that if I have it displayed correctly, it's a certified copy in a prominent and durable manner at every business premises, and the clients come to visit our one premise, maybe our head office, and the clients use a side door or the back door, and we have it displayed at our main front entrance. It's still available for production immediately. If the client wants to see it, we just walk to the front entrance, boom, there it is, and it's displayed in the correct way. Right, and to keep our license, we have to make sure that our owners comply with honesty and integrity at every moment and any time during the life of our FSP. Now, if our FSP is not a sole proprietor, and it's not an entity with just one owner, so it's a business with multiple directors or multiple members or trustees or partners, then the only requirement for them would be to comply with honesty and integrity. It's only when we have an owner that is a sole proprietor or it's an entity with only one natural person as director where all the fit and proper requirements must be met. Accounting and auditing requirements. So important to know that every FSP must appoint an external auditor. This external auditor cannot be from the FSP, that's why it's external, not internal. Reason being conflict of interest. There must be no conflict of interest. The FSCA must approve the appointment of an external auditor because they have to make sure that this auditor understands what is expected of them in terms of phase. What kind of reporting will they require from this person? If this auditor finds any irregularities or they suspect irregularities in the accounting practices of the FSP, they must report it to the FSCA. So your auditor is like another snitch within your organization, right? If the business relationship between the FSP and the auditor ever comes to an end, so if the business relationship is terminated, the auditor has to inform the commissioner or the FSCA or the authority of the termination. They have to say, listen, ABC Financial Services said they no longer want to make use of my services. And if this auditor was going to submit a report on an irregularity or a suspected irregularity, they still have to do it. They still have to submit that report. Right. Other than that, the FSP must maintain full and proper accounting records. These records must be brought up to date monthly. They have to annually prepare their financial statements, and these audited financial statements must be submitted to the FSCA within 4 months after the financial year end of the FSP. Not the FSCA, of the FSP. We also have to make sure that the FSP complies with financial soundness requirements. Now, what is financial soundness? It refers to the financial resources that the FSP has available. So it says here that this only applies to FSPs and juristic representatives. So that means in your personal capacity as a rep, you don't have to comply with it. The FSP and a juristic FSP. If you're unsure about a juristic FSP, we'll discuss it again in the representatives video. So financial soundness. We have this table where it says that we've got the different FSP categories. So we've got category 1, 2, 2A, 3, and 4. We then have the additional asset requirements, working capital requirements, liquidity requirements. Liquidity requirements basically refer to the cash flow that the FSP must have available at all times, right? So again, a tip, you'll always notice that category 1 and 4, the rules are not as strict as for the guys in the middle. So category 1 FSP, we don't have any additional asset requirements. We do have working capital requirements. It says that our current assets must exceed our current liabilities. And that stays the same for every FSP category, which basically just means that we need to own more than we owe, right? Then the liquidity requirements, our FSP must have liquid assets equal to or greater than 4 out of the 52 weeks of our annual expenditure, which means that of the 52 weeks of the year, we need to have, in our cash flow, we need to have enough money to cover at least 4 weeks expenses of the FSP. All right. Category 2, here we don't have any additional asset requirements, but we still have to own more than we owe because it still says current assets must exceed current liabilities. Our liquid assets must be equal to or greater than 8 out of the 52 weeks of our annual expenditure. So in a year of 52 weeks, we must have at least 8 weeks worth of expenses available in our cash flow, in our bank account. Category 2A, here things get a bit more intense. So yes, we need to own more than we owe, but that's not enough. It says the assets of the FSP must exceed the liabilities by at least 3 million rand. So not just must we earn more than we owe, we must earn 3 million rand more than what we owe. And then our liquid asset requirements, it says that liquid assets must be equal to or greater than 13 out of the 52 weeks of the annual expenditure, right? Which means that out of the 52 weeks, we need 13 weeks worth of expenses available in our cash flow. Category 3, exactly the same. Yes, we need to earn more than we owe, but we need to earn at least 3 million rand more than what we owe. And also liquid assets must be equal to or greater than 13 out of the 52 weeks of our annual expenditure. And then last one, category 4, current assets must exceed current liabilities. It says that our liquid assets must be equal to or greater than 4 out of the 52 weeks of our annual expenditure. All right. So my tip here, easy way to remember financial soundness. I've just memorized this, 4, 8, 13, 13, 4. That's it. When I see a financial soundness question, and in RE5, I would say 50-50% chance that you'll get a question on it, and RE1 guaranteed that you'll get a question on it. So this is what I've memorized, 4, 8, 13, 13, 4. Now when I see a question in the exam, I just go and write 4, 8, 13, 13, 4. After I've done this, then I tell myself, obviously, I went and I wrote it in order. So this is for a category 1, 2, 2A, 3, and 4. Obviously, it's out of 52 weeks because we've got 52 weeks in the year. So they all get a 52, 52, 52. You get the idea. Now I just need to remind myself of the 3 million. Now the 13s, they've already got the 3 in them. So where we have the 13s, because they already have a 3, that's where the 3 million is a requirement. And for all of them, current assets must exceed current liabilities. Right. Undesirable business practices, extremely important. You will get anything from 4 to 6 questions on this, and it's not a lot of information, so they'll ask you the same question in different ways. Right. Now, what is an undesirable business practice? An undesirable business practice is a practice that the commissioner has declared undesirable and he has published it in the Government Gazette. Once it's published in the Government Gazette, it immediately becomes law, which means that if you continue with the practice, you're breaking the law. Right. Even though it says interested parties will have 21 days to make a written response, that basically just means that you've got 21 days to tell the commissioner what you feel. What do you think about this publication? If you don't agree with it, you have 21 days to tell them. But during the 21 days, you must already be compliant. Okay, he's not going to republish it. He's not going to wait for the 21 days to pass and then republish it. The only thing that can happen after 21 days is he can maybe withdraw it. But once it's published, when the commissioner intends to declare this practice undesirable, if it's in the Gazette, you must stop immediately. Okay. So what happens is we get FSPs that knowingly continue with this practice, and then we have FSPs that continue with the practice not knowing that it is an undesirable business practice, because unfortunately we don't all read the Government Gazette every day. So it's very common for the FSP not to be aware of the publication. So what it says is if an FSP continued with the practice because they were unaware of the problem or they were unaware of the publication, then it is seen as a phase offense. Okay, so then we'll see possible license, suspension or withdrawal, possible penalties. But if an FSP continued with the undesirable business practice and they were unaware of the publication, they did not know, they acted in good faith, and they'll use that term in the exam, they'll tell you that this FSP acted in good faith by continuing with an undesirable business practice. Then the commissioner will, or the authority, will grant the FSP 60 days to rectify the damages caused, okay, to the satisfaction of the authority. If not rectified within 60 days, then it becomes a phase act offense, right? And then we'll see possible suspension or withdrawal, penalties, things like that. So currently our undesirable business practices will be any business practices that will harm the relationship between the different role players, that will unreasonably prejudice any clients or maybe discriminate against any clients. Anything that will deceive a client or unfairly affect the client is seen as an undesirable business practice. Very common for them to ask you for the incorrect answer here. Which of the following will be seen as undesirable business practices? Select the incorrect option. Then you don't select any of these options. So careful reading here. In terms of our license, there is something that we need to be aware of in terms of the Medical Schemes Act. Now it says here that if we are an FSP that will be rendering financial services in the medical schemes environment, in the health services benefit environment, we essentially need two licenses. We need what they call the FSP license, and then we need accreditation under the Medical Schemes Act. Now the requirements for both of these licenses are exactly the same. Whatever I need to do to get the one, I need to do to get the other. If I lose the one, I lose the other. If I get the one, I get the other. Because the requirements are exactly the same. If I no longer meet the requirements for the one, I by default no longer meet the requirements for the other one. Right. So in RE5, they like asking you questions about the Medical Schemes Act, but they normally aim at lapsing. Because if you studied hard enough, and we'll get to that part in a second, if you studied hard enough, you know that lapsing is not compliance related. Right? You didn't do anything wrong. So you might think, oh, if my FSP license has lapsed, it won't affect my accreditation under the Medical Schemes Act. But it will, because whatever happens to the one happens to the other. They're joined at the hip. Right. So because the requirements are the same, it says if the FSP applies for the phase license and it is granted, accreditation under the Medical Schemes Act will be granted by default, and the other way around. Right. This is not an easier way to get your license, or there's no loophole here. The requirements are exactly the same, so you won't get away with anything. Which then takes us to losing our license, withdrawal, suspension, lapsing. I know that you already saw a video on this, but I'm going to just go through it with you again. Now, we normally refer to the burger here, right? And you are not ever allowed to change the order of the burger. It works out exactly like this for a specific reason. There we go. All right. If this is our burger, what is the best part of any burger? Suspension, the middle part, where all the flavor is at, right? That's where the meat is, that's where the spices and the sauces and the whatever, all the toppings. They're not really called toppings, they're probably, I don't know, the inside. All right, so that's the best part of the burger. Why is it the best part? In terms of suspension, because we can get our license back. It can be reinstated. All right, so if you think about when your best friend got suspended in school, or you got suspended, you were not allowed to go to school for a specific amount of days, but then afterwards you were allowed to come back and continue with your school career. All right, so suspension, normally due to administrative non-compliance, can be reinstated during the period of suspension. We are not allowed to give any advice, not to new or existing clients. We will only be allowed to provide intermediary services and only to existing clients. Withdrawal and lapsing, they're both bread, and something that the breads have in common. With the bread, we cannot get our license back. Okay, so can't be reinstated, it's gone forever. There we go. And then with withdrawal as well, can't be reinstated. But these two events happen in very different circumstances. So withdrawal, top part of the burger, it normally has some sesame seeds, it's entertaining, it has pizzazz to it. Withdrawal is very serious non-compliance. This is where we see the FSP being found guilty of fraudulent activities, clients were harmed, money was stolen, very intense things. We'll talk about them on radio stations. We'll read about them in the newspaper. Lots of gossiping going around. We think drama. We think Steinhoff. We think VBS. Right, so that's when the license will be withdrawn. The owners of the FSP will be debarred from applying for a new license, and that debarment period will be specified by the commissioner. It can be anything from 5 years to 35 years, okay, depending on the seriousness of the situation. Lapsing, our license is gone forever. It cannot be reinstated, but we did nothing wrong. Okay, there's no compliance issue here. This is normally if our FSP is a natural person, normal person like you and me, and the person dies, becomes permanently unable to continue business due to mental or physical illness. The person has been finally liquidated, finally sequestrated, and I'm saying it like this, and I'll explain it to you in the next slide. Or in the case of all FSPs, not just sole proprietors, if the FSP voluntarily surrenders the license or the business becomes dormant, they're closing down. They didn't do anything wrong. No one will be sentenced to prison. There will be no fines. Right? That's when the license lapses. But it's also destroyed, can never be reinstated. If you do voluntarily surrender your license and a few days, months, years go by and you decide, oh, I want to get back into FSP business, you can't just go and reactivate the license. Now, important for the exam, withdrawal is initiated by the FSCA. Suspension is initiated by the FSCA. Lapsing is initiated by the FSP, not the FSCA. Important for the exam. So I'll repeat that. Withdrawal initiated by the FSCA. Suspension initiated by the FSCA. FSP initiates lapsing because it's not compliance related. Right, for your license to be suspended or withdrawn, somebody must have gone and snitched and said, this is what they're doing. Okay, now suspension and withdrawal will happen. Lapsing, there's no snitching involved. That's why it's initiated by the FSP. Right. So the FSP license of a natural person will lapse if that licensee is finally sequestrated, finally liquidated. The reason why I'm underlining the words finally here is in the exam they sometimes try and trick you by using the term provisionally. If the licensee is provisionally sequestrated or provisionally liquidated, it's not enough reason for the lapsing of the license. It has to be a final liquidation or final sequestration. If it doesn't say anything in front of it, it just says the licensee has been sequestrated or the licensee has been liquidated, then it is final. It's only when they use the term provisionally where it is wrong. Right, the license of a natural person will also lapse if that person becomes unable to carry on business due to mental or physical illness, if the person has died. Then for all FSPs, not just the natural person FSPs, if the business becomes dormant or the licensee voluntarily surrenders the license. Now, a trick question. If they give you a question in the exam where they tell you that an FSP has two directors, one has 70% shareholding and the other one has 30% shareholding. The moment you see two directors, it is not a natural person FSP, which means that if one of these guys had to die, the license will not lapse because it's not a sole proprietorship. It's not an entity with one natural person as a director. We've got two directors, which means that if one of them had to die, whoever replaces that one must just comply with honesty and integrity. Right? But they have now added some more sprinkles to this question. So they tell you an FSP with two directors, one has 70% shareholding, the other one has 30%. The 70% shareholder dies, and you immediately say, Yolandi said I must not fall for this trick. The other one will continue. Whoever replaces this one must comply with honesty and integrity. But then they also tell you the 70% shareholder dies, and he was the only key individual. What happens to the FSP license? The license will be suspended until an approved key individual is appointed. So even though his death did not affect the license, the fact that the only key individual died, that affects the license. Right. The process, so if the FSP intends to suspend or withdraw the FSP license, this is the process that must be followed. Possible sequencing question, not extremely popular, but possible. All right, so it says that if the FSCA or the authority commissioner intends to suspend the license of the FSP, the commissioner may consult any other regulatory authority, may, not must, he may, but he must inform the licensee, okay, the FSP, of the intention to suspend and the grounds of the suspension. So he must inform the FSP on the intention saying that we intend to suspend your license for these reasons. They also have to include the intended period of suspension for how long the license will be suspended. Any terms attached to the suspension must also be disclosed. Then the FSCA must give the licensee a reasonable opportunity to make a response and then make a final decision. Withdrawal, same thing, there's just no intended period because it's final, right? So again, the Commissioner may consult any other regulatory authority, but must inform the licensee of the intention to withdraw and the grounds thereof. Any terms attached to the withdrawal, so in addition to the license being withdrawn, what else will happen? Will there be a civil case open, something like that? Then give the licensee a reasonable opportunity to make a response and then make a final decision. Once this letter of intent has been received by the FSP, the license is already regarded as being suspended or being withdrawn, and they already must act as an FSP with a suspended license or a withdrawn license. Now, with suspension and withdrawal, both of these cases of non-compliance, obviously suspension is just not as serious as withdrawal. Suspension can lead to a withdrawal if we do not comply with the requirements to have it uplifted. So it says here that during any period of suspension, the licensee is regarded as a person who is not authorized to act as an FSP. Therefore, no advice, not to new or to used clients, not to new or to existing clients. Only intermediary services to existing clients, not even intermediary services to new clients. A person whose license has been withdrawn will be debarred for a period specified by the Commissioner from applying for a new license, and the Commissioner may, on good cause shown, vary any period like that. That's why I said we see anything normally from 5 to 35 years of debarment for the owners of the FSP. Now, when will we lose our license? So these are some of our phase offences. They're not all the offences, just popular ones. So failure to get our FSP license and then we operate as an FSP. Obviously here we can't lose our license, we don't have one. So we'll see possible imprisonment, financial penalties, that might happen here. Then if we conduct financial services related business with a non-licensed person, our product provider of our financial products are not, they're not registered or they're not an authorized FSP, boom, gone license. Failure to display our license correctly, we risk losing our license. I think it will probably be suspended here, but we never know. Depends on the mood of the Commissioner that day. Then, if we fail to ensure that every director, member, trustee, or partner is fit and proper in terms of honesty and integrity, if the FSP fails to ensure that every key individual and representative is fit and proper, if the FSP fail to debar a representative when they must do that, offense. If they fail to keep and maintain records the way they must, it's an offense. If they fail to have their annual financial statements audited and submitted within 4 months, that's an offense. So again, these are not all the offenses, these are just some of the offenses. Everything that we need to comply with will automatically become an offense if we don't comply with it. And once found guilty of an FSCA or phase offense, it says that the person found guilty is liable to a fine not exceeding 10 million rand or imprisonment for a period not exceeding 10 years or both. So possible penalties will be up to 10 million rand or up to 10 years imprisonment or both. The maximum penalty is 10 million rand and 10 years. And if they ask you what is the maximum monetary penalty, it's just 10 million rand, not up to. Right, so different ways that they can ask the question around the penalties. In RE5, you're guaranteed to get a question on the penalties. They might ask you for the possible penalties. That's when you say up to 10 million or up to 10 years or both. If they ask you just for the maximum, general maximum, then both 10 million and 10 years. If they ask you for the maximum imprisonment, 10 years. Maximum monetary penalty, 10 million rand. Right. Get to studying.